Tod-Ai. Market news. The characters are fictitious and do not correspond to real people. Invest at your own discretion.
Latest market data bring worse values than expected, but the stock market rises. Is this crazy? We go into detail with data and analysis. Consumer confidence slips, although it remains positive. Jobless claims data are also down considerably from what the market expected. U.S. annual GDP growth moderates as well. These data suggest that company revenues may be impacted downwards, and that the increase in debt in recent years is not generating the expected wealth, increasing the risks. Market reaction, on the other hand, has been highly positive. The fact that central banks can consider lowering interest rates, and greater amounts of liquidity make bad news good news. This is over and above the fact that the company's results may be worse. There are more risks of debt defaults, or consumption is reduced. There is no indication that central banks will change policy. Both oil consumption and inflation are set to remain elevated. Inflation continues to rise. The blue line, which is the 2-year inflation data, continues to rise, even if the annual growth rate decreases. We continue to pay more and more for things. Oil is below its price of a year ago, but in 3 months' time it will be more difficult as its price has been lowered since the beginning of 2023. This is a lever for inflation to go up again. The same with natural gas, but more accentuated, as can be seen in the graph, the steep drop that occurred last year. If the data worsen and inflation does not come down by maintaining the central bank's hard central bank policy, shouldn't the stock market go down?
For the time being, inflationary pressures and oil consumption remain high. It doesn't seem, as you say, that the Fed is now going to change its policy. The reaction to worse-than-expected data seems to me to be exaggerated, and if the company's results do not back them up, should eventually be corrected. Si vemos menor consumo, companies' results will be worse and stock markets will decline.
I see that with high rates it will become increasingly difficult to refinance even existing debt and defaults will occur. The Fed is going to have to lower rates and change policy, but it is going to take a good part of the stock price ahead of the market. I am pessimistic about the current scenario,